Oh, cool. I'll have to get me one of those. Ken, how's it going? Angel, Michael, Hyman, Sheps, Ephra, Jake, what's going on? Mill, Dennis, Paul. Hey, Doc, what's happening? Alrighty. So we got 1, 2, 3, 4, 5, 6. Whoa, didn't get camera number 7 rolling. Camera number 7. And that should be going now. Hey, Doc's over here saying hi. Cool beans. Dami, what's going on? Power Book 4, Force Season 3, coming this fall. Don't miss the premiere. Dami, I have no idea what that is, but okay. All right. So let's get ready to get started. First and foremost, my name is James. This is Dividend Stock Talk, brought to you by The 10MinuteTrader, where I invest in dividend stocks for weekly cash flow, take you along for a ride for a safe, predictable, consistent 1% per week. Now, for those of you a little tough on the math side, that's 50% or more per year. Now, it is slow, it is boring, it is the same thing day after day after day. It's only 5 or 10 minutes a day. It's not that difficult. It was created for a 9-year-old, meant to be simple, safe, predictable, okay, and no way for her to lose. If you need to, every once in a while, we'll go over that. We'll introduce you to my 9-year-old daughter who originated this. She sparked the whole scenario. The words just didn't want to come up. Started the whole scenario. She crawled on my lap, said, "Daddy, what are you doing? Can you teach me?" Okay, so how do you teach a 9-year-old? Well, here we are. You are about to learn what it takes for a 9-year-old to invest in the stock market. Now, a lot of adults don't get it. And still, to this day, a lot of adults still don't get it. So, it was created for a 9-year-old. I'm going to share it with you. No, free of charge. I'm not going to charge anything. I'm not going to ask for anything. I won't even throw a pitch at you at the end of the night. Promise. I'm not going to sell anything. So let's see what's happening. Ask whatever questions you want. I will take a look at whatever stocks you have me take a look at, but what I dislike immensely when people don't listen. Now, I like stocks that are predictable, consistent, and I know exactly what they're going to do on a consistent basis. Okay? Because I'm looking for a safe, predictable income. I'm 61. I'm retired. I have no desire whatsoever to change my stubborn ways. That's it. Okay, this old dog don't want to learn new tricks. I came up from a time where if it ain't broke, don't fix it. If it works just fine, leave it alone. So I'm looking for 1% return every single week. You guys want to check it out? Fine. Let me just kind of set some rules. Rule number 1, ask a question only once, please. Make sure if you want me to take a look at something that you know something about it. Specifically, is it consistently profitable? And does it have weekly options available? That's it. Buy the dip, get rich quick. Yeah, I don't think so. It doesn't really work that way. And I don't like to throw my eggs into that basket. Okay. Shell, good evening. K8, what's going on? Mamusky, what's happening? Jim, what's going on? Jim Cravens, Steve. And James Childs. All right. Alrighty. Let's get ready to go start. Hey, Wampa's here. Cool beans. Hey, Grace, did you get a chance to get that spreadsheet opened up? It's kind of weird. Every time I put that link in there and I try to open it, it opens. But then again, it's coming from my computer. That probably could be why. Your opinion on today's gap? To be 100% honest with you, Marco, I haven't looked. I just turned my computer on like 5 minutes ago. And nothing whatsoever. Squirrel. Yeah, I don't do cryptocurrency. Sorry. No Bitcoin either. Mr. Toby, how you doing? Buy all the dips. Okay. How can you lose? Simple. All right, so that's enough for the questions. Let's see what we got. What do we have? Joshua, John, Mr. Sweetness. All right. Ashley, Link, Ava, Dave, Mersha. Good evening. Super Rumbo. Interesting name. Ricky, how's it going? Alan. VP David Graham wants to take a look at SoFi. All right, Mr. Graham, let's take a look at SoFi. I would like it if, by chance, you could at least give me some indication of what it is you're looking for. Okay, so David, VP Graham. SoFi, $14.90. Take a look at that. Here's the high, here's the low. That's where it was a year ago. Here's where it is now. Look at the motion. Up, down, up. Well, what do you have there? Let's take a gander at it. Before we get any closer, let's take a look at the numbers. Is it going to be a wise idea to buy it and try to make some money off of it? Well, currently it's at $14.90. So the closest strike price is going to be the 15, and that's going for 29 cents. Well, 29 cents on a $15 stock is just shy of 2%. Now, 2%, what do I know about Coin X Pro? Nope, don't even bother. I don't do coins. You're in the wrong place. I'm trying to save you some time, some energy, and a lot of grief. You're not going to find what you're looking for here. I don't do coins at all. So let's take a deeper look, and does it make sense to jump into this? Because if I'm going to do a trade, I want to make sure it's a simple, safe trade. Okay? I'm 61. I have no desire to go back to work. None. I've been working since 1973. I'm kind of enjoying this semi-retired life. I call it semi-retired because I'm still working, but I'm not getting paid. I go to my mother's house and I work all day long. Then I go to my kid's house and I work over there. Then I come home and I got work to do here. But no one's paying me. So retired life is really not that great if you're making money. If I can stay working. The only benefit I got is I sleep until I'm done. Let's keep on keeping on. All right, so SoFi you say, huh? All right, well, let's zoom in and take a look at the numbers. A year ago, SoFi is at 633. The bottom of the year, 598. I turn that screen a little bit. Turn that screen a smidge. Then I got to turn the lights behind it because I get that reflection going. There we go. And the reflection's still there. Oh, much better. I can read it much better now. All right, so here's the high, here's the low. Look at the momentum. Up, down, it's going up again. Currently, we're at 1490, so we're going to look at the 15s. So let's see what it looks like. All right, so the last 90 days looks like this. High, low, where was it? Where is it? Look at the motion. Down, up, down, up. Well, it's at the high of the 90-day period. Well, what makes me think it's going to be any better on the 30-day period? Because the last 30 days gives me a good idea of where it's going next. Well, here's our bottom. Here's our top. Well, if you take a look and you think deep and hard about your childhood days on the playground, you remember those teeter-totters or seesaws? They go up, they go down, they go up, they go down. Well, stocks do the exact same thing. They go up and they go down. That is it. Okay? The childhood teeter-totters, okay? That's like the seesaw. It goes up, goes down. That's it. It doesn't go sideways. It doesn't go round and round. It goes up, goes down. So stocks do the same thing. Here's the bottom. It went up. Well, what's it going to do next? Next, it's going to come down. Well, it's just plain and simple. McGinty, what's going on, McGinty? Looking to see if SoFi works this week. I think so. I'm still thinking of having SoFi for long term. Okay, sit tight. Hold on. I'm not finished with SoFi yet. I still got a little bit more to put into it. So personally, this week is, for me, it's not the time to jump in. Okay? Bottom's here, top's here. Usually, when you have an increase from 12 to 15, that's $3. $12, okay, to $15. It's a $3 move. Now, I know you don't think $3 is a lot, but $3 on a $12 stock is 25%. So ask yourself this question. If you bought something and it went up 25% in 1 month, are you going to hold on to it and hope it goes higher? Or are you going to take your profits and say, thank you, go on, take the money and run? It's up to you. Everyone is different. Some people say, let it ride. Okay, myself, I'm not looking for the let it ride horsey here. I'm looking for the give me a profit quick, thank you, I'll get another one from someone else. We checked last night. This week, there's 10,160 companies, I believe it was. It's a lot. Okay, over 10,100, I think it was 116. Yeah, 10,116 different companies we can choose from. All right, so this one doesn't fit this week. Well, there's a whole bunch more to choose from. Don't get me wrong. If you like SoFi, well, wait for that opportunity. Got a question over here. Okay, McGinty, is Lululemon a good buy since it's down? It's almost an all-time low. Well, the way I look at it, Lululemon is not on my list. And the reason it's not on my list is because that's not the type of stock I'm looking for. I'm looking for companies that consistently increase their profit sharing, also known as dividends, because you have two different types of companies. Well, actually, you have three, but you actually only have two. Okay, let me explain. You got your private companies, which you usually can't invest in. And then you got your public companies. And out of those public companies, you have one on the left and one on the right. Well, the one on the left can take all the profits and put it back into the company for the company to grow faster. That's called a growth stock. I'm not looking for that. If you're here looking for tips on growth stocks, you're in the wrong place. I'm just trying to save you some time and effort. I'm looking at income stocks, stocks that pay a dividend on a monthly or quarterly or annual basis. Now, I like to take those and manipulate them a little bit so that I can get a safe, predictable cash flow on a weekly basis using a good quality growth, not a growth stock, income stock, because I'm looking for income. I'm 61. The money that I have coming in has to come from my investment in the stock market, which is weekly options. So I buy good stocks and I sell weekly options against them, known as the covered call. It's one of the safest trading strategies there is. It literally has hundreds of videos on YouTube explaining exactly what it is. You buy the stock at a certain price, you sell it at a certain price at a certain date, you collect a premium. Premiums, cash flow, however you want to look at it. Cash flow is cash flow for me. If I put up X amount of dollars, well, I want some type of return. Well, in this case, if I put up X amount of dollars, I want 1% return. So if I put up $100, I want $1 back. If I put up $500, I want $5 back. If I put up $1 million, I want $10,000 back. 1% is 1% no matter which way you look at it. Okay? So the more money you get, the bigger your 1% is. And if you get that 1% every single week, well, that's over 50% per year. Can you live off of that? That's the question. Can you live off of that? Well, either you can or you can't. We're not done with SoFi yet. So that's the numbers for SoFi. Before we go on any further, let's find out why I don't invest in SoFi. Okay, it's a weekly options. Okay, the price is right. The chart looks okay. Let's take a look at not seasonality. Let's take a look at how often they increase their dividends and what that looks like. All right. Now, where we are now is Yahoo Finance. Now, Yahoo Finance is where I go find all my fundamental information. High, low, when did it open, when did it close, did it pay a dividend, how long ago, what's the earnings, what's the book value, what's the revenue coming in, the revenue going out, the last projections, all that kind of stuff. Fun. Yay. Well, here, I'm looking at historical data, which goes back to 1986, because apparently SoFi, it says 1986. That's weird. SoFi doesn't have any dividends. Well, isn't that weird? We're on a dividend channel, okay? Dividend stock talk, dividend investing for weekly cash flow. Well, SoFi has no dividends. So how can I tell when it's going to move? How can I tell if they're consistently profitable? Okay, I'm a lazy trader. I don't want to spend a whole bunch of time. I'm retired. My working is over. Okay, my work week, I don't do that anymore. I do whatever I feel like it. I just so happen to enjoy this kind of stuff. That's why I'm here. Well, besides, I'm creating a video diary for my children and my grandchildren. So when I'm gone, hopefully my knowledge will be passed along to them. And you guys get to witness the road trip, so to speak. Okay, so this is why I don't do SoFi. There are no dividends. And there's a reason why I require dividends for all the stocks I use. Let me explain to you simply why I like dividend stocks. Okay? Let me just find something here. All right, here we go. Now, a dividend stock is a company that takes some of its profits and gives it back to the investors. That's you and me. So when we buy the stock, we become owners in that company. Well, what I'm doing now is not just becoming an owner in the company or creating what I like to call a weekly cash producing asset. Think about it. You can buy a business, spend a couple $100,000 on a business, and it'll give you a 5 or 10% return over the end of the year. Well, that's great. Well, what if you took that same amount of money and invested into a certain style of trading in which you take that investment, put it into the stock market, manage it a couple of, 15, 20 minutes a day, and get a 1% return per week, which comes to a 50% return per year? Granted, I see you taking jobs off of the job market, but after you get to a certain point, don't you want to just kick back, relax, and say, you know what? I've worked enough. I'm retired. Let my income come from here. Okay, so the reason I like dividend stocks, behind me you see just a regular calendar, okay, June 20, 2025. Well, this is called an ex-dividend calendar. Each one of these little green dots represent a company that has consistently increased its profits and now are going to pay out a dividend. Well, there's 4 quarters in the year. January, February, March, that's quarter 1. April, May, June, quarter 2. July, August, September, quarter 3, which, by the way, is right around the corner. In 2 weeks, quarter 3 starts. Quarter 4, October, November, December. So here's the thing. Each quarter Each quarter has 13 weeks. Okay? Interesting thing. Most of these stocks pay a dividend every 90 days or once per quarter. So each quarter has 13 weeks, 66 trading days. 66 trading days for all these companies to pay out a dividend. So if you arrange your trading with a calendar, okay, just buy one, collect the dividend, okay, next week, sell it, buy another one, collect the dividend, sell it, buy another one, collect. You could do that every week, 13 weeks, 66 different trading days. So think about this. I like dividend paying stocks, specifically those that have 2 decades of increased profits. That means the dividends get higher and higher every single year. Well, think of it this way. You have the dividend kings, dividend aristocrats, dividend champions, dividend contenders, and then for the fun of it, just throw in Warren Buffett's list. 5 lists is about 300 companies. You take 300 companies that pay a dividend every 90 days or every 66 days, because there's only 66 trading days in a quarter. 13 weeks, 16 days. Okay? So if you had 300 companies all paying a dividend in that time frame, okay? So from the first day of the quarter to the last day of the quarter, 22 trading days, 600 companies coming through that revolving door. And guess what? When the quarter begins again, they do the exact same thing. So for the first week of the quarter, you got a certain set of stocks. Second week of the quarter, certain set of stocks. Every week there's a certain set of stocks. 300 of them stretched out through 13 weeks, 66 trading days. 66 trading days, 300 stocks, that's at least bare minimum of 3 a day if you average it out. 66 days, 300 companies, that's about 3 a day, I think. Something like that. But think about it, okay? every single 90 days, okay, McDonald's pays out a dividend. Okay, what is that? That is, let's count, okay? That's week 13, week 12, week 11, and week 10. So week 10, McDonald's, Stanley Black & Decker, GPC, Kimberly-Clark, Pepsi. Okay? Week 10. Week 11, BDX. What's BDX? I forget. T. Rowe Price, Albemarle, Chubb, Coca-Cola. Week 11. Week 12, ECL. What the hell is that? I don't know. Nordson. Week 13, Cincinnati Financial, Ben Franklin, Medtronics. And then it goes back to week 1. And then we do the count all over again. So week 1 to week 13, the same stocks over and over and over again. Why? Well, because they're profitable. Why else would you invest your money? Would you seriously invest your money into a company that's not profitable? I mean, think about it. That's silly. Okay? What do we have? My great-grandfather has a whole bunch of Aflac. Is that a good one? Oh, of course it is. Copa Airlines, never heard of it. But Aflac is a great company. They're a dividend king. They've actually increased their dividends for 5 decades. Now, what you plan on doing with that stock? Well, hey, it is what it is. All right? So that's the reason I like dividend stocks. Also, what I forgot to tell you. Okay? The date on the calendar kind of represents the date when I should start looking at it. Because stocks, dividend stocks, have a tendency to increase in value, actually go up in price just before the EX date. And if you know exactly when the EX date is of all your favorite stocks, well, then you could actually set your calendar. Oh, wait a minute, it's June 16th? I got to buy this stock this week. It's actually that easy. Because if a stock moves predictably year after year after year, and all the historical data supports that, because the dividend is an entry into the data stream in every single year. Can you imagine every single year on the second, that's 10th week, 11th week. We're on the 11th week. Are we? No, we're on the 12th week. Holy shit. Yeah. Okay, so we're on the 12th week of the quarter. So every single 12th week of each quarter, those are the stocks that pay. Hey, Muma, cool beans. All right, so if you knew when a stock was going to move consistently every single week, because that's what the calendar's for. It's set by the calendars. These stocks pay the first week of the first quarter. These stocks pay the 10th week of the quarter, every single quarter. So it's like doing the trades and then, well, didn't we just do that 13 weeks ago? Yep. Guess what? You're going to do it again in another 13 weeks. Because General Dynamics, Cincinnati Financial, Ben Franklin, T. Rowe Price, they pay every 90 days. And the ones that I like the best are the dividend kings. Look at this one. GPC, Genuine Parts Corporation. They have, I need 2 hands for this one. You ready? 2 hands. You ready? 77. That's 7 decades of increased profits. Most of you in the audience aren't even 70 years old, yet this company has increased its dividends to the shareholders for more than 70 consecutive years. And look at this. Pepsi, they're over 100 years old. Well, GPC's not 100 years old, but 70 years. That's nice. Where can I get the dividend calendar? Hey, VP David Graham. This here behind me, this is Think or Swim. It is a trading platform through Charles Schwab. Okay, that's where this one comes from. But you can go to Google and write into Google, say, hey, ex-dividend calendar. Just put it in the search bar and you'll see a whole bunch of companies offering to give you for free their dividend calendar because they want your business. Well, Charles Schwab wants your business too. Okay, I love this. I've been using this trading platform for 20 years. There's not a single thing I've seen online that hasn't changed in 20 years. Well, this thing changed. This thing hasn't changed. It's the same. Okay, Tom Sosnos threw this together a couple of decades ago. Well, he sold it to TD Ameritrade. TD Ameritrade didn't change it. And then TD Ameritrade got bought up by Charles Schwab. Now, Charles Schwab hasn't changed it either. It's still the exact same as it was 20 years ago when I first started using it. They have a few extra features nowadays, which is cool. All right. What do we have here? All right, Mumad, you're welcome. 333 people in the chat. All right. Cool beans. Let's keep on going. John, how's it going? Victoria, how are you? Sherry, hey, Sherry, how are you? How much do you need to start for dividend stocks? Okay, Ulrich, believe it or not, now that they have come up with fractional share trading, you can trade with 50 cents, $1, $5, $20, $50,000, whatever you want, whatever you're comfortable with. It's not the amount of money that you should be worried about. It's the consistency and the time value. Okay, if you're in your 20s, great, golden, wonderful. Okay, you got a whole lifetime ahead of you. If you're in your 50s and 60s, it's not going to be that easy. Okay? So everyone's different. Do I ever lose? Of course I do. Thoughts on GNLN? What the heck is GNLN? All right, we got to go back. Here we go. Okay, go to here. Go to there. And for the fun of it, now when I say GNLN, who came up with that one? GNLN, who did that? All right. How much did we get to that one? All right, Brandon, GNLN. All right, here we go. Hell no. What the hell? I hate it when people do that. Brandon, when I say I'm looking for dividend stocks that have weekly options and 2 decades of profitability. That thing wasn't even, no. It does nothing but just piss me off when people waste our time. Do I ever lose money? Yes. Encourage more viewers? Share. Okay. Token meme. What is your win percentage? Because I know that's important, is having a positive, okay? Johnny, CCJ, Johnny. What is CCJ, Johnny? CCJ. Ouch. Oh, all right. Well, I'm going to say that no to this one right off the top. Reason being is, look at this. You bottom at 35. She jumps up past 70. That is 100% increase within 2 or 3 months. Yeah, I ain't buying that. Okay, the profit's already taken away. It could still go up. I want nothing to do with it. I don't buy at the high. Okay? I've never once ever heard anyone say, hey, Johnny, take a look at this. It's at the absolute highest it has ever been, ever. Let's buy some. What the hell for? That's the time to sell, not the time to buy. In my opinion. That's just me. Call me weird if you like. Okay, so let's go back to this question right here. Token meme. What is my win percentage? I would have to say, for this year, it's got to be over 99%. I got 3 losses this year. That's it. 3, and I must have done at least 1,000 trades already. With the news, what stock should I be targeting for my option plays? Anthony, I can't give you an answer to that one. Only because I don't involve myself into politics, religion, cryptocurrency. Certain things I just stay away from because they got nothing to do with me. You know, I'm 61. They're not gonna draft me. What am I worried about? You know, nothing they could possibly do are going to affect me unless they, plan on something that's we're not going to be unhappy about. Johnny thinks that's funny. Kroger. Scotty wants to take a look at Kroger. Now, I did buy some Kroger this morning. The numbers just looked too appetizing to pass up, but hold that thought. Got some questions over here. Oh, wow, lots of questions over here. Hi, hello, buy the dip, blah, blah, blah. What's my opinion on today's gap? I didn't see no gap, buy all the dips, blah, blah, blah. Kind of questions. Questions. Oh, Lagmoose. Wait a minute. Lagmoose. Lagmoose Dream. Who the hell are you? Also would like to. Okay, cool. Okay, cool, cool. All right, all right, all right. All right, all right. Like you guys having a conversation on your own. All right. I was at TD Waterhouse in the beginning and had to relearn all the buyout platforms over 3 years. About time I get it. It changes again. Well, the funny thing is this has been the same for the last 20 years. And I love consistency. I do. If it ain't broke, don't fix it. If it's working fine, leave it alone. That's why you can still see some of those cars from the early 1900s still running and driving. Weird. Let's keep on keeping on. GameStop, no thanks. I don't do ETFs. Okay. All right. All right. So I'm basically going to ignore YouTube. I have no idea why that channel gets out of hand so quickly. Okay. Okay. Pelon, how are you today? IPO, Boxable. Okay. Max Smart, I said earlier, you're relatively new here. I like companies that have 2 decades, 20 years of increased profits. Okay? I don't do IPOs. Sorry. Kevin, how's it going? Okay. Ooh, Anthony wants to take a look at Dow. What platform do you recommend to trade on? Okay, I don't make it. Okay, token meme. I don't make recommendations. Number one, I don't know who you are, know nothing about you, no idea what you want to do, what you're looking for. I'm just showing you what I'm doing. You've got to figure out what works for you. Now, I like Robinhood. I use Robinhood and I use Thinkorswim. Now, Thinkorswim I use for my big accounts. Robinhood I use for my smaller accounts. Okay, because it's simple, it's easy, it's right there on my phone. Okay, I can be sitting waiting at a traffic light and make a couple of trades on my phone. Okay, I've done it plenty of times. Okay, I can pull up my phone and make a couple of trades on the beach. I love my Robinhood. I don't like Thinkorswim trading platform on the phone. It's way too much information. What do you need to start? Well, Ulrich, you need the right state of mind. Because here's the thing. Your right state of mind, thinking and believing that you can do it. Because you basically have 2 choices and only 2. And the funny thing is, they don't teach you this in school or college. How to spot a good investment, how to balance a book, how to plan a budget. They don't teach that kind of stuff. Okay? So I can't really tell you what to do. But the simplicity of the trade that I'm showing you, it's simple, it's safe, it's predictable, it's consistent. It was created for my 9-year-old daughter back in 2008. She said, Daddy, what are you doing? Can you teach me? So how do you teach a 9-year-old when most adults don't get it? Okay, it's a simple trade. It's one of the simplest trades there is. It's easy. It's safe. It is so safe. As a matter of fact, you are allowed to do this trading strategy inside your IRA. Okay, it's just called a covered call. It's a simple, easy trade. And it's predictable. If I can get 1% every single week from a covered call, that's over 50% per year. The numbers just make sense. And the more years you have to go, well, your account can double every 14 to 16 months. But you do have to do something. You do have to tend to it, kind of like a garden. If you take care of your garden, you have a nice plethora of bounty. Ooh, that's a good one. However, if you neglect it, the weeds are going to take over and you're going to get nothing. Same thing with your money. If you take care of it, if you keep an eye on it, well, it's going to grow. The more you keep an eye on it, the more you take care of it, the faster it's going to grow. Okay, great. Well, the trading strategy I got for you for free, not charging anything. I'm not going to ask email, nothing like that. Okay, let's do some. So give me a few good stocks to take a look at. We'll do a few good trades, and you'll see how easy it can be. All right. Pressure, what's happening? All right, so let's keep on going. Desiree to Crow. Cool bean, interesting name. I'm back and still your... Okay, cool beans, Urban. All right, so Beast, we just looked at SoFi a couple of minutes ago. SoFi has no dividends, so it's going to be a no. Rob, same thing. I don't do most ETFs. I don't do indices. I only do certain companies. Certain companies, that's it. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, so on and so forth. Why did I buy Kroger? John, we're going to go over that right now. All right. Black Eyed Joe. Dividends for the money. It's hard to beat. Thank you, Black Eyed Joe. Johnny, what would you put in your Roth IRA if you're in your 20s? Okay, Johnny, I would set up my Roth IRA as a self-directed Roth IRA and be able to do a trading strategy that is optimal and simple. Okay, Roth IRAs can be great, and you can, with this strategy in a Roth IRA, double your money every 14 to 16 months. It's a freaking awesome strategy for 9-year-olds. So let's take a look at a few companies and see which one fits and which ones make sense. All right, so here's Dow. Okay, I'm looking for 5 things anytime I look at a chart. Doesn't matter what chart I'm looking at. 5 things. Number 1, the high, the low. Where was it? Where is it? And where is it going? Okay? It should take you 3 to 4 seconds to figure that out. It's not that difficult. And then I want to move over to the numbers. The numbers is what can I buy it for? What can I sell it for? What profit can I make this week doing a covered call? Now, covered call is simple. There are literally hundreds of videos on YouTube explaining the covered call. At 30.57, the 30.50s are going for 47. Well, 47 is more than 1%. And we're going to do one on Dow, regardless of what the chart looks like. But I'm going to do one on Dow so you can see how the mechanics work. Okay? But remember, in the morning when the market is open at 9:30, all these numbers change. So this is where you practice your algebra. Okay? If I'm buying it for this, I'm selling it for that, how much am I making? Is that more than 1%? Great. Wonderful. All right? So let's take a look. Dow was at the high of 55.84 last year, bottomed out on DTS day, 24.93. We're sitting at 30. Well, let's zoom into this area right here. Take a look at that. She drops, goes up, drops, goes up. Okay, so we're going to do it at 30.50. All right, because I like Dow. They've been around for about 100 years. Why the hell not? All right, first thing we want to do is get rid of this. All right, now I'm going to change this right here to it says covered call because I want to have the setup. Because once you change the trading strategy, right here, these are all the trading strategies. Okay, we're only doing the covered call. That's it. So don't ask for any of the other ones. Just this one right here. It is simple. It's easy. 1% is the target. 1% a week. Every single week is over 50% a year. Learn something simple first before you venture on out to any of these other things. Because these other things, well, a lot of them have more profit, but they also have a higher risk. So risk reward. Okay, what I'm doing has almost no risk at all. Almost no risk at all. Now I say that for those people who like the, who believe the government when they say who killed Kennedy. Okay, you believe that crap? Yeah, okay, you believe anything. Anyway, let's get back to where we were. All right, so we're going to do the covered call. All right, everything changes. Now it is set up specifically for a covered call. I said I wanted the 30.50. That's right here. Okay, so I'm going to click on that, and it's going to preset the order for me. So everything's done for me. 30.50. There we go. Now, it's already preset for 1,000 shares. I don't want to buy 1,000. I'm just going to do 100. That way it's easier for you guys to understand the numbers. All right. Then I just choose, do I want a market order or limit order? Now, I hope you understand the difference between a market order and a limit order. Okay, a market order says, hey, I'll take it. Well, what price? Don't care, I'll take it. That's the market order. Give it to me now. This is what I'm willing to pay. Limit order is like, wait a second, this is what I want to pay. That's it. Well, I always do the market order because I really don't care about the minor few pennies here and there, because I make sure the numbers work before I even do it. I love a naysayer. Here we go. Money covered call is nothing more than a hedge to protect you from a downside pullback. Money, thank you very much. I appreciate that. Now, if you wanted to have a nice little debate, be more than happy. I do a covered call every single week for 1% return, ROI, every week, 1%. That's over 50%. 50% for the year, my brother. That's what I'm making consistently for the last 15 years. Okay? No, he disappeared. Oh, well. It's what it is. So make sure the numbers work. What am I buying it for? What am I selling it for? Do I see a risk there? Well, there's a risk with Dow. There is. Okay? Now, here's the risk. Are you ready for it? The risk for Dow would be if Mother Earth opened up, swallowed up Dow and everything associated with it, and then disappeared, took it along with Atlantis and the Bermuda Triangle. It's a possibility. If you believe the Warren report, okay, submitted to the federal government, if you believe that, you'll probably believe that Dow could be sucked up into the earth and just disappear overnight. Well, it's true. Is there a possibility for Dow to go belly up and bankrupt overnight? Yeah, it's possible. But is it going to happen? Usually, if there's something going wrong in a company, the first thing they do is start laying off people. Then they start cutting salaries. Then they start cutting this and cutting that. Well, I didn't hear anything about Dow in the last 2 or 3 years. They're just trotting along. They've been doing the same thing. Well, for the last 100 years, well, business as usual. All right, so let's get rid of that crap. Let's go back to here. So again, the difference between a market order and a limit order. Limit orders, this is all I care for paying. Market order, give it to me now. I'll take it whatever it's at. That's what I do. The reason being, when I get into a covered call, because the stock and the option are already tied together. So I already know exactly how much I'm making. Okay, so here's the order right here. Buy one covered call at Dow, 100s, that's the weeklies, 20 June 25. That's just the date. That's when this option expires. That's this coming Friday. So whoever's going to buy this from me has between now and when it expires at 3:59 p.m. on Friday afternoon. Because at 4 o'clock, you can't do anything. All right? The $30.50 call option against the stock at the, I guess it says limit, or it's supposed to say market. Edit. At the market order. All right. I want it at the market order. to open. Now, they're not stuttering. They're not repeating themselves. It's actually 2 orders. You're opening 2 orders. So think of it this way. You're buying the stocks, which usually happens in New York, Wall Street. And then you're selling an option. Chicago Board of Options is in Chicago. That's 2 orders. One's going this way, one's going that way. However you want to take it, look at it. It's 2 orders in one. And what I like about a market order, 2 orders in one, it will fill first thing in the morning. 9:30, 9:31, I'm usually filled. I'm usually done with my trading by then. So, the nice part about it is my maximum profit is telling me right there. I already know what my profit's going to be before I even do the trade. That's what's so appealing about the covered call. The stock doesn't have to do anything. It can stay exactly where it is, and I already know what my profit is. $44 per contract. 1 contract, $44. 2 contracts, $88. 20 contracts, $880. So on and so forth. Same thing. Cost of the trade, including commissions and fees, $3,006. So let's bring up the calculator to find out what kind of rate of return that is. Calculator, here we go. So we take the profit, $44, divided by the cost of the trade, including the commissions and fees, $3,006, $3,006, and that gives a grand total of 1.4 at 1.4% for 1 week. Not even 1 week, 4 days. Because Monday's already gone. So 4 days left for this week. Okay? So 1.4%. 1.4% is way over 50% per year. Okay. Money, yes, it's possible, but stocks can drop 4%. I'm well aware of that, but thank you for informing me. Just there to support. I can do covered calls in my Roth and traditional Vanguard. New to this. Yes, you can. Okay? Hypothetically speaking, I don't know anything about Vanguard, but I do know a covered call is one of the safest trading strategies there is, and you can do it in your IRA. Okay? So we have a couple more questions over here. What about Mara? Okay, Moo Cow will take a look at that. Buy Blackstone and Raytheon since they are going to war. Okay, thank you. Mirror your screen. Agent, if I knew how to mirror my screen after a year and a half, don't you think I would have by now? As far as I know, YouTube doesn't have that in their, what do they call this thing? Their platform? Is that their platform? Or is it their live thingy? So if I do my camera, if I switch my camera, what are you going to see? You're going to see the curtains behind me. You don't want to see that. You don't want to see that. So there is no way of inverting it with the current software that YouTube has to offer. Sorry. So there you have it. 1.4% on Dow. Showed you the whole thing from beginning to end. Is it a good company? Well, it's been in business for over 100 years. Do you like it? Well, that's a big question. When did you quit your job to do this full time? See, Michael, I didn't quit my job to do this full time, and I don't do this full time. For me, this is just a hobby. I've been trading my own money for the past 25, 30 years because I knew 25, 30 years ago that those guys that you're paying or whoever you're paying to take care of your money, they don't have my best interest in mind because I've seen what they're offering and I've seen what they're getting on a weekly basis. So you got two choices. Learn to do it yourself or accept what they're willing to give you. Give your money to someone else, let them do it for you. Or learn to do it yourself. Alrighty. Cool. Well, now I know. Well, alrighty then. He is teaching just very 101 fundamentals. What's up? Thank you. Tiny Coco. Hi there. What's cooking today? What's the live stream about? Oh, Tiny Coco. The live stream is about investing in dividend stocks for a weekly cash flow for a safe, predictable, consistent 1% per week. That's over 50% per year. If that excites you, hey, hang out, ask questions, see if it makes sense. Because it doesn't make sense to everybody. Some people just don't want to do it. And there's nothing wrong with that. Okay, appreciate your time. Fundamentals is what I need to start with. Taz, that's what you always start with, fundamentals. That's what I'm trying to understand, Token. So how would you lose money? Well, you'd lose money. Okay, here you go. How will you lose money doing this? Well, I'll tell you, the majority of the people getting started, they lose money by hitting the wrong button. I know, it sounds childish, it sounds juvenile, but trust me, everyone hits the wrong button at some point in time. You buy instead of sell, you sell instead of buy, you use the wrong strike price, you use the wrong strike date, you do something that is just not correct. Okay, that's the first thing people do. The first mistake, the first time you're gonna lose money is basically because you hit the wrong button. And hey, everyone does it. I did 3 times this year. Another streamer looking for new members to join his website to increase his wealth and to offset. Okay, money, I'm not quite 100% sure what you mean by that, but hey, you're free to express your opinions any way you like. Okay, but preferably, it looks in the path that you look like you're going to take, you're going to have to come at me with something a little bit better than name calling. Because I've been doing this for a while, and I haven't met a single person yet in doing this that's actually proven me wrong in any way, shape, or form. And no, I don't get my wealth from anybody joining whatever I'm selling, okay? My wealth already came, and it's coming from my 1% per week that I earn on my what do you call it, my little nest egg, for lack of better words. But I'm all game. If you want to try to stump me, okay, I'm here until 11:30, and it's only 10. So you had an hour and a half to come up with something you think I don't know or you think I'm wrong about. Appreciate your time. Love to learn from you, man. This is awesome. Cool. Oh, Scott Rich, his losses. I have no idea what that means. All right. Chris, OSCR. Is the strategy just buy dividend stocks and sell covered calls? It's a little bit more to it than that, but basically, yes, that's what it is. Because it's not just buying the dividend stocks, it's knowing when to buy them, and is it the right time to buy them? And do the numbers actually satisfy what it is we're looking for? I'm looking for 1% every single week. Well, either it's going to work or it's not going to work. Or it's the right time to buy it, or it's not the right time to buy it. It's not that difficult of a strategy. It was created for a 9-year-old. So yeah, you should be able to grab it like that and say, oh, easy. It's simple. Okay, Skit, we're actually going to get to that. Okay, Chris, OSCR. Never heard of it, but let's take a look. But remember, I'm looking for companies that are consistently profitable. OSCR. Oscar Health. Why doesn't that sound familiar? Okay. Let's go to Yahoo Finance. OSCR. Okay, going to Yahoo Finance to see if they pay dividends. And see, that's probably why I've never heard of them. Chris, there are no dividends in the selected time period. That means no, because if they don't share their profits, why would I want to invest in them? Another streamer, look, okay, fine, money's going, toolbar, dump. Do you only sell weekly covered calls? Absolutely, that's all I do. Okay. Patrick, Misty. Oh my goodness. MSTY, Misty. Okay, we'll pull it up on Yahoo Finance just so that you will see whether or not it fits. Okay? Yield Max, MSTR Option Income Strategy ETF. Misty. Okay? Well, let's take a gander. Come on. Whoops. All right, so apparently MSTY, Misty, does have dividends. Well, let's take a look at them. Now, remember what I'm looking for. I'm looking for 2 decades. That's 20 years. Okay, so let's take a gander. Hold on, I got a couple questions over here. Okay, Chris, OSCI, that's what we're looking at right now. Okay, let's take a look. Now, remember, 2 decades of consistent profitability, which means each number should get higher and higher. So let's check it out. Okay, so here's where I have a major problem with MSTY. April 4th, 2024 was their very first dividend. So that tells me this company's not even 2 years old. So when I pick up 2 fingers and I say I want 2 decades, how can you interpret that as two years? It's not even a 2-year-old company. When I say 2 decades, that's 20 years. Okay, you like it, fine. You invest. I'm not even going to bother looking at it. Scotty Cook, what's happening? What's happening, Scott? There we go. Oh, 101 Sea Beast. Okay, could I look at ASO? All right. I look for stocks that recently dropped in value, then purchase. Is that a good tactic? John, that's an excellent tactic. Okay. How do we find the calendar? Again, I'm sorry. All right, Token. You find the calendar simply by going to Google, put it in the search, ex-dividend calendar. And a whole bunch of websites come up that have ex-dividend calendars. I just happen to like the one in Thinkorswim because I get to import my own stocks into it, and I get to do my trading right here also because it already has it there. Why the hell not? What is your profession? Engineering, I guess. The video is flipped. My dud. Okay. Tesla value investment. No, Tesla is a cash flow, not cash flow investment. What do you call it? Growth stock. That's what it is. Tesla's a growth stock, not an income stock. Okay, so 101C Beast 11. Okay, you want to know what my target delta range is. I really love to meet your kids. Okay, if your 9-year-old understands what a target delta range is, it's a hell of a lot better than mine. Because at 9 years old, my daughter had no idea what the Greeks were, and nor did I have the desire to try to teach her. So I don't use a target delta range. I understand exactly what it is, but try explaining that to a 9-year-old. Doesn't work. Favorite stock this year would be U.S. Steel. Thoughts on Gain? Wait a minute, isn't Gain a monthly optionable stock? Let's take a gander at it. Gain, Gain. Yeah, Gain is a monthly option. Okay, listen closely. That person wanted Gain. 20 June, 18 July, 17 October, 16 January. Those are months of the year. Now, I like to think you know the difference between the month of the year and a week of the year. There's 52 weeks and only 12 months. So why would I want monthly if I can only do it 12 times a year? I'm getting 12 to 24% a year. Now, some of you are okay with 24% a year, but wouldn't you prefer 50 to 100%? Now, I understand some people don't have time to devote to their money and taking care of their money. They just prefer to go to work and pay their bills. Nothing wrong with that. That's how the economy works. People going out, paying their bills, and going to work. Fine. Well, for those that want to take advantage of their own money, to be able to invest it yourself and get decent returns from something that is simple and easy, well, fine. That works also. Okay, so Gain is a no. I don't do monthlies. The numbers just don't work. What was your worst trade using this strategy and what went wrong? Oh, my worst trade using this strategy before I learned about rolling an option. Rick, you ready for this? How long do you hold the underlying stock or do you do the option on the same stock? Dawn, I do the same stocks over and over and over again. Let me answer Rick's question because I'm sure a lot of you want to know this one. All right, you ready? About 4 or 5 years ago, okay, I bought Target at 135. All right, so I bought Target at 135, and then it proceeded to drop down to 102. So I got 5 simple rules. Let me go over them really quickly. Rule number 1: never buy something you don't want to hold on to long term. Rule number 2: never sell at a loss. Rule number 3: make sure the company's consistently profitable. Rule number 4: weekly options only. And rule number 5: make sure the numbers work. Okay, so a few years ago, I bought Target at 135. Okay, I sold the 135s. I think I got like 2 or 3%. Great numbers, awesome numbers. Okay, the next week it went down to, I believe, around 132. So I sold the 135s again. Okay, normal. Okay, then it started dropping. Every single week, it dropped, it dropped, it dropped, it dropped all the way down to 102. So when it's down at 102, I'm selling the 107s. Okay, fine. So it goes from 102 to 108, 110, 107, so on and so forth. So it goes in the bottom for quite a while. Every single week, remind you, every single stock I own, I get a rate of return, regardless of what it is. Whether it's 1%, 2%, 3%, 0.5%. Now, I was getting between 0.5% and 0.25% every week from Target. All right? So, that being said, in November, okay, we had what is called a black swan event. So, it was at 110, all right? It was at 110, it closed at 110. Very next day, it opened up at 135. I think it was 125, 130. No, 125. Okay, it jumped 15 points overnight. Well, lo and behold, I did not know about rolling options at that point in time. So I had no choice in the matter. I had to buy it back. That $10 jump in the stock, well, it had a huge jump in the option. I had to pony up 15 grand because of that gap to the upside. That's called a black swan. They do happen. Okay, you can have a whole year's worth of profit be wiped out overnight if you don't know what you're doing. Now, I didn't know about rolling an option. If I did, I would have rolled that option and offset that loss over a longer period of time, and I wouldn't have had the loss. But it was a learning process. It was uncomfortable, but it is what it is. Now, just to let you know, I didn't lose money on target because as the stock moved up, so I kept on rolling the options until, and now remember, this happened for about 9 months. So every single week I collected a premium. Every single quarter I collected a dividend. So I got 3 dividends and like 35 premiums. And I ended up selling it at, I think it was like 135, 136, something to that effect. Okay. However, I did lose 15,000. So a huge chunk of the money I made off a target evaporated like that because I didn't know about rolling options. Had I known, I would have rolled the darn thing. Okay. So that's my worst experience. That's not my worst experience trading. That's my worst experience with the covered call. All right. Anyway, where were we? Do you do weekly DTE? No, I do not. I do not like sitting in front of a computer. Okay? Where's your methodology? I don't see it. My methodology is simple. Okay, I do covered calls on pre-qualified dividend stocks, and those are companies with at least 2 decades of consistent profitability and weekly options. That's it, 2 criteria. Consistent profitability and weekly options. That's it. That's all I'm looking for. OSCR is a no. We already looked at it. It's a no. Ooh, Nods now wants to take a look at Occidental Petroleum. Cool. Now here's a silly question. Now, I know you don't think it's a silly question, but it's a silly question. Nicholas, did you win more money than you had lost? Absolutely. Why do you use Thinkorswim? Tiny Coco, I have not seen, nor do I have the desire to even look for another trading platform that is superior for what I do. Okay, you got to figure out what kind of trader you are, what you want, and then figure out what trading platform works best for you. Now, 15 years ago, I wrote a book, Picking the Best Trading Platform for Your Trading. Something like that. That's the name of it. Although I've researched and take a look at over 30 different trading platforms, this is the one that came out because this is exactly what I was looking for. Hey, James, Chatterbox in the house. What's happening there, Chatterbox? Hey, James, how are you doing? What are your thoughts on Medtronics? Ooh, I like Medtronics. MDT. MDT. Let's take a gander. I'm going to say no to MDT for this week. Now, don't get me wrong. I love MDT. I really do. However, there's a time and place for every purpose under heaven. They wrote that some like 2,000 years ago in that little book. Yeah. This is not the time. Take a look. The high, the low. Where was it? Where's it? Look at it. Down, up, down, up, down, up, down, up. Well, look at where it is. From the bottom here, because the stocks go up, and they have profit taking, then it comes down, then it consolidates. People say, oh, this is cheap, let me buy some. Then it goes back up again, back down. Well, right here is the new bottom at 80. Then it jumped up to 87.92. Well, from 80 to 87.92, let's call it 88. It is what it is. It's a 10% move. So take a look. Okay? 30-day bottom, 30-day top. For me, it's not a time to buy at a 30-day top. Because usually, think about it. What goes up must come down. Goes up, that's a 10% jump. Yeah, I take profits at 2 or 3%. How many people you think are just waiting to take it at 10%? I mean, wait a week. If you really like it, wait a week or two. Wait for it to come down, find a new bottom, turn around, go back up again. But that's all stocks do. They go up, they go down. You find a good stock, stick with it. Look at it every day. I mean, how long does it take to take a look? It takes you 3 to 4 seconds to take a look at a chart. High, low, where was it, where is it, what direction is it going? Well, this one, it's going up. Well, hypothetically, it's reaching the top. Now it should come down. Hypothetically, it's not guaranteed. There's only 3 guarantees in life, and I know most of you know 2 of them. All right, let's keep on going. For the average person, why trade options instead of just owning great companies for the long term? Well, Dylan, here's the thing. Buying a stock to hold long term, what rate of return do you normally get? Well, over the last 10 years, the stock market has averaged 8 to 10% return. Well, if you're okay with that, fine, no problem. If you're okay with that. Now, in order for me to pay my bills at 10% ROI per year, I'd have to go back to work and double or triple or quadruple what is in my account so that I can afford to do that. Okay? I've been working since 1973. I think I put my time in. There's a lot of people out there saying, I need a job, I need to work. So why would I compete with those that need a job if I don't really need one? See what I mean? I'm doing society a favor. Stepping back and say, hey, let the young kids come in and take over from where I'm leaving off. Okay? So, yeah, buying a great company to hold on to for the long term doesn't pay my bills like this does. So think about it. If I have $100,000 and I make 8 to 10% per year, which is the average, okay, over the last 10 years, 10% of 100,000 is 10,000. That's $1,000 a week. No, sorry, that's $1,000 a year. Let me try that again, okay? 100,000 at 10% a year is $10,000. You break that up over a month, that's right around 900 and some odd dollars. So 900 and some odd dollars a month to pay all my bills. Yeah, that's not going to work, okay? So my $100,000 account is giving me $1,000 a week. Well, that pays all my bills, okay? So I have no desire to go back to work. And it kind of insults me when people try to live my life for me. But thank you. Yep, inverted HS. It happens. I'm getting my 5% from my stocks weekly. All right, Kate Lee, boss lady, nice to go. Ulrich, you're right, that's two of them. Tell me what's the third one. Ulrich, tell me what the third guarantee is for life. Okay, if economic volatility causes, okay, of traditional investments, where should prudence dictate capital allocations? Okay, Brad, you got to come up with a better question. Straight, right to the point. And pretend like you're talking to a 6 or 7-year-old. Use words that are easier to understand rather than me have to break out a dictionary. Okay? Next. Russian, Alex, Kagala. Did you make a covered calls when stock loses money? Absolutely. Because these stocks don't lose money until you sell for less than what you paid for. Think of it as any kind of asset. Car, house, artwork, cryptocurrency, anything. What you buy it for is what you pay for it, because that's what you think it's worth. Okay? So what happens in 2 or 3 weeks when it goes down in value? Do you panic and sell? Okay, you bought a Picasso for 10 million and someone says, yeah, I don't like it. Well, now it's only worth 8 million. Do you sell it at a loss? Probably not. If you buy the house next door for 300 grand and all of a sudden, when the major stores closes and now it's a little bit tough in the economy and all the real estate goes down, do you sell at a loss? Probably not. A cash producing asset is what it is. It costs you X amount of dollars. So how you take care of that is going to be up to you. Do you bring in a professional manager to take care of it for you? Fine. If not, do it yourself. So here, what I'm buying is a cash producing asset. Okay, so if I take 100 grand and put it into a house and get $1,000 a month profit, well, that's $12,000 profit per year. Well, that's only a 12% return. Well, that kind of sucks. Well, what if I took that $100,000, put $50,000 into Medtronics, put $50,000 into AT&T, and each one gave me a 1% every single week? Well, that 100 grand is $1,000 a week, every single week at 1%. Well, think about it. It's a cash producing asset. Well, if you treat it differently as a cash producing asset, well, it will give you cash every single week. And yeah, the value will go up and the value will go down. That's why you have to watch it every single day to see where is it now. Okay, what did I buy it for? What option did I sell? What's the value now? What does that mean? What do I do next? It's like baking a cake. You put all the ingredients in, you put the oven in, you set the oven, okay, and you check it to make sure everything's right. If everything's right, great, you leave it alone. If something's wrong, you fix it, and then you proceed. That's it. Stocks go down. Yep, so what? They go down, guess what they're going to do next? They'll go down, and then they'll turn around and go back up again. Very rarely will you see a stock drop down to nothing. Okay, when Enron went bankrupt, well, it dropped down, and then it bounced back up, and then it dropped down, bounced back up until, what happened. But anyway, let's keep progressing. CD TikTok. Hey, James, have another one if you have the time to look. Mark, hey, I actually own some, Mark. Oh, wait a second. Somebody asked me, why did I buy Kroger today? Hold the phone. Someone asked, why did I buy Kroger today? Well, I'm going to need the glasses for this one. Are you ready? Let's go. Let's take a look. Kroger, KR. Now, to be 100% honest with all of you, Kroger was not on my list. It's not. It's on Warren Buffett's list. So yeah, if it's good enough for Warren, I'm going to look into it. So here we go. 3 to 4 seconds. Looking for 5 things. Once you know the 5 things you're looking for, 3 to 4 seconds. You ready? Here we go. High, low, was, is, direction, down, up, down. That's it. Okay, right now, here we are. Not at the high, not at the low. Somewhere in between. It went from just below 50 to just below 75. It's a $25 move. $25 on a $50 stock. That's a 50% increase from here to here. 50% increase, you're damn sure there's going to be profit taking, and there was. Look, profit taking, now it came down. Now here, we're turning around, going back up again, because there's only so much profit taking. Okay, the rest of the people are just holding on. Because remember how many people we have buying and selling. Well, you need some help? Here it is right here. 6.5 million. 6.5 million shares traded today alone. All right, well, let's take a look at the numbers. And I'll show you why I bought Kroger this morning. Oops, nope, need glasses still. All right, a year ago, 50.54. Bottom of the year was the end of June, and that was 49.93. Now, it took about 9-10 months to find the high of the year, right here. Okay, April 22nd. That's the high of the year. All right, and that was 73.63. Well, a little bit of profit taking, rebounded, a little bit more profit taking, rebounded, and here's some more profit taking right here. 30-day bottom, 64.11. That was Wednesday. Last Wednesday. Thursday, higher. Friday, higher. Monday, higher. Yep, that's I jumped in this morning. Let's take a closer look at the 30-day chart to give you a better idea. Okay? Look, you cannot not see it. Look at it. Up, down, up. Well, where's it going to go? Look at all the room it has to run. Okay, now I don't know about you and I don't know what you're looking for. I'm just telling you what I'm looking for. And for me, this is freaking lovely. For me. Now, before I get too excited, let's go take a look at the numbers and see if they make sense. Number one, what am I buying it for? $66 right there. Okay, what is the $66 strike price selling for? So if I go to the store, pick up something for $66, okay, I come home and say, hey, here's your for $66, and you slide me an extra 5 or 10 just for going to get it for you. Same thing. You're just doing someone else a favor. Think of it that way. I'm going to a concert. I'm going to buy 4 tickets, keep 2 for me and my girl, and 2 for whoever else wants to buy them from me. Same thing. I'm just buying something for someone else. They're going to give me a premium for doing them a favor. That's the way I like to look at it. It also gives me a weekly cash flow. Check this out. 20 June, that's this Friday. 27 June, that's next Friday. 2 Fridays away, 3 Fridays away, 4 Fridays away, 5 Fridays away. Every single Friday I can do Or I can, every single week, I can do a covered call on Kroger. Now, is there risk? Yeah. There's what? 5,200 Krogers worldwide? So just imagine this. Simultaneously, the earth opens up and swallows up each and every Kroger there is. Could it happen? Could. If you believe the magic bullet theory in the Warren report, hell yeah, it could happen. And I feel sad for those of you who don't know what that is. All right. Can you explain why Kroger works well? Why do you think the Kroger stock going up is a good sign? Uh-oh. If a quiz is called quizzical, okay, lovely. Okay, so why do I think Kroger is a good choice? Well, number one, I'm going to explain it to a manner, and I'm going to see if you get it. Now, a lot of people are going to get it like this. Let's see if you get it. All right? Now, Kroger, KR, stock symbol, Kroger, is on Warren Buffett's list. I mean, Warren Buffett's buying this thing. So I'm thinking Warren Buffett is hypothetically a better trader than a lot of people. If it's good enough for him, it's good enough for me. However, I want to make sure I buy it at the right time. Now, when I say at the right time, well, what do stocks do? Now, do not feed me a bunch of BS because I'm not going to believe it. I've seen it over and over and over again. I've been trading for over 20 years. I've never, ever, 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 ever seen a little sign saying, hold on, I'm going to Johnny's house to mow the lawn. It doesn't work the way. Stocks go up, stocks go down. They don't come to your house to mow the lawn. They don't take the dog out for a walk. They don't wash the dishes. They don't even make the bed, put little candies on the pillows. No, stocks go up, stocks go down. That's it. Okay, if your 30-day high is here, your 30-day bottom is here. Well, you explain it to me because I've been trading for a long time. To me, what it means to me is that at this point here, at $70.50, people are thinking to themselves, wow, I made a nice little profit. Let me take my profit and sell now. So when they do that, stocks drop. And it gets to a point where people say, wait a second, Kroger's at 64? Well, that's a deal and a half. Let me buy some. So for those people who say, oh, Kroger at 64, let me buy some. Well, here's the great opportunity. Kroger at 64, they buy it. What happens? The stock goes up. How far is it going up? I really don't care, me personally, because all I'm looking for is that right there, the premium. I'm going to buy it at 66. I'm going to sell it at 66. And what am I collecting? I'm collecting the gas money. Call it whatever you want. It's actually, factually, an insurance premium payment. You need four things for an a contract. Four. Okay? Beginning date, ending date, consideration, money exchanging hands, handshake, a piece of pie, whatever, some type of consideration. And number four, meeting of the minds, which means I agree with you. Ooh, check that out. Ooh, thank you. Who gave me that? I forget. All righty. Fourth, meeting of the minds. I mean, I'm agreeing with you. You're agreeing with me. You're buying the stock from me by this date at this price. That's a contract. These options are contracts. They're insurance contracts. They were originally intended for rich people not to lose money. So if you thought your stock was going to go down, well, you buy a put. And as the stock dropped, the put would go up. So you don't lose anything. Except for the premium. And if you're over the age of 16 and a half and you drive a car, well, you know you need insurance. Okay? Premium. You pay it every year, every month or every year, whatever. Okay? Home insurance. Health insurance. Okay? Car insurance. So now you have a stock insurance to protect you from losing or gaining for whatever reason. But these are what they are. Stock options are literally insurance contracts. So I'm looking for the premium. That's all I'm looking for. I could care less about the stock. My concerns are two and only two. Consistency of profitability. Yep, Kroger's there. Good enough for Warren Buffett. Good enough for me. Weekly options. Yep, it's there also. Is it the right time? Well, 30-day high, 30-day bottom. Now she's shooting up. Simple. I jumped in at 66. I picked up, I forget what. Let's do one. Let's do some. Hey, Zachariah, basically Wyckoff method. Never heard of Wyckoff, but thank you. Mo Motion, thank you. Oh, take a look at that. Syria wants to take a look at Micron. We'll take a look at that. Hold on a second. All right, so let's continue. So currently, today, it was at 66. So let's do a covered call at 66. Well, that's what I did this morning. She opened up at 65 and change. I said, oh, let's do the 66. All right, let's get this out of here. Okay, let's change this to covered stock. There it is. And the 66 is right there. Okay, just one contract. Okay, you figure out how many you can do with whatever money you have. Okay, and this is where you probably should have paid attention in algebra class and left that little girl alone. You know, Lisa with little ponytails. Yeah, you should have left her alone and paid attention to Mr. Hill. Yep. Well, what you got?
The question I have has to do with, I see that there's earnings before market open on June 20th on Kroger. So I'm just curious how you incorporate the earnings into this trade.
Great question. Did everybody hear that? He's concerned that the earnings are coming out on the 20th. So how does that affect the trading? Well, two things. Number one, I don't go by earnings only because I've seen positive earnings where stocks go down. Can you imagine a company says, hey, we made a lot of money. Well, then why did the stock go down? Don't know. We've seen negative earnings. Damn, we missed our mark, didn't quite get what we wanted, but then the stock goes up. But some stocks do react either negatively or positively directly related to the, someone came up with the magic bullet theory. Believe it or not, someone actually came up with the magic bullet theory. Okay? Hold on a second, because I think this is funny as hell. The magic bullet theory, if you understand what the magic bullet theory is, okay? A bullet being shot goes in one direction. It stops in midair, turns 90 degrees, proceeds 3 feet, stops again, turns another 90 degrees, then changes its angle and continues forward. That's the magic bullet theory. And some scientists figured out, yeah, it's possible. I'm sorry, I was in the military, right? We were shooting guns, grenades, all that kind of nice stuff, machine guns. It was kind of fun, okay? I've never, ever, ever seen a bullet stop and turn. But that's the BS they want you to believe, okay? The magic bullet theory. Hey, thanks, Ulrich. I like to entertain people. So, Ulrich, the third guarantee in life. Are you ready? Here it comes. You're going to love it. Death, taxes, and disappointment. You're definitely guaranteed to be disappointed in your life. Okay, Trump warns Iran civilians to evacuate Iran tonight and goes into safe shelter. Oh, cool. Finish work for Jesus. Kroger EX date is on August 15th. How will you hang on to it to get the dividend payout? See, you're under the impression that I'm looking to get the dividend. No, I only use the dividend to tell me when to buy the stock. Because a dividend is more like the starting pistol in a race. Bang, you know? And it's like, okay, this is when the stock usually moves. Okay, dividend stocks have a tendency to increase just before the dividend is paid out. So knowing that information, I can go in with a safe trading strategy, make a quick little profit and get on out. Because after the dividend is paid, stocks usually have a tendency to go down. So why do I want to collect the dividend? And, here's a good point. You're going to love this one. You ready? Hold on. Sit tight. You're going to love it. Sit tight. Watch this. Okay, let's get out of there. Oh, wait a second. We didn't find out what the profit was there. Hold that question. Okay, let's go back to this trade so we can finish up this trade first, because this is the one I did today and made a nice little profit on it. Okay, so let me just recreate it for you and see. I got 3 or 4 questions I want you to ask. That's it, 3 or 4. Don't ask them to me, ask them to yourself. Number 1, does it make sense? Number 2, do I like this company? Whatever company you look at, that's a question you really need to ask yourself. Number 2, do I really like this company? Am I willing to hold on to this at this price until the day I die, pass it on to my children? That's how I want you to feel about everything you buy. Because why else would you buy something if you don't feel deeply by it? Why? Why would you buy it? Okay. Number 4, do I like it at this price? Am I willing to do a covered call every single week, bring in some kind of cash flow? Now, I can't afford to buy a Kroger's grocery store, but I can afford to buy a couple hundred shares of Kroger grocery stores and get a weekly return without having to bag groceries, without having to stock shelves, don't have to mop the floors, but I can benefit from it on a weekly basis. Okay, that's the way I look at things. I'm creating what is called a cash producing asset. I love Kroger. I do. Haven't been there that much because it's not in this particular area. But anyway, let's keep on going. All right. Remember when I said I want a simple, safe, predictable, consistent 1% per week? Well, let's break it down a little bit. Simple. It's one of the simplest trading strategies there is. The most simple trading strategy is buying the stock. But there's no profit there. There's no profit until you sell something. Well, if you buy it, you have to wait for it to go up before you can get your profit. And you don't know how much that's going to be. Well, I don't want to do that. A covered call, however, I'm buying the stock and I'm selling the rights to someone else to buy it from me. All right, so follow me for a second. All right, if I buy it at 66, where the hell is it? If I buy it at 66, I sell somebody the rights to buy it from me at 66. The only money I'm making is the transaction fee or the option premium. And that is $163 per contract. Each contract, $163. Okay, how many contracts can I afford? Well, let's take a look. Take out my trusty old calculator. Okay, $163, 163, all right, 163, divided by cost of the trade, including commissions and fees. Now, this is not, you're not spending. See, people have got a misconception between spending and investing. Okay? You're investing, you're not spending. Because see, here's the thing. If you pick right, the value will stay steady. You will own okay, here's your little mini Kroger store. Okay, what's your Kroger store costing you? Your Kroger little store is costing you $6,400. So you own a cash producing asset called Kroger. And every single week you have the ability to make money from it. Well, how do you figure that? How do you figure that? Well, you sell a covered call. Well, this week I'm getting $163.50 this week for this Kroger stock. Okay, think of it as a cash producing asset. So I'm buying Kroger in a box, whatever you want to call it. But it's giving me $163 this week. So let's do some quick math and we'll dive deep into it. So we take the profit, $163.50. We divide that by the investment. Now remember, it's an investment because when you sell your Kroger, you're getting all that money back. Because remember, rule 1, never buy something you don't agree with, you don't like. Rule 2, never sell at a loss. So this investment should hypothetically never go down. You should never sell for less than you paid for it. Now, I have no control over what you do. That is a self-directing thing. You got to figure it out for yourself. But you think about it. Why would you buy something today and then next week sell it for less when you just paid for it? That makes no sense. What the hell are you thinking? I love that. What the hell are you thinking? Think about it. Does it make sense? I hate to be so, what do you call that? Commonsensical. Commonsensical. Ooh, that's good. Commonsensical. Okay. I'm not Republican. I'm not Democrat. I'm commonsensical. I like that one. I think I'll do that as a t-shirt. I'm not a Republican. I'm not Democrat. And then it'll be a red and blue shirt. It'll be a purple shirt. Yes. Purple shirt. The color of the new, what do you call that? New political movement. Purple. It's not red. It's not blue. It's common sense. Think of it. That's great. We'll go back to teaching common sense. Let's get back to what we're doing. All right, so the profit, $163.50. Cost of the trade, including commissions and fees, $64.37. So we divide it. 63.47 comes to a grand total of, holy cow, 2.57. Now, that doesn't sound like a lot, does it? But add it up in your head. 2.57% per week. Now, I told you I average 1% a week, which is 50% per year. Okay, 2.57 is more than 100% per year. And it's on a company that's owned by Warren Buffett. Well, he doesn't own the company, okay? He owns the stock. Okay, so he owns a bunch of the stock of Kroger. So if it's good enough for him, it's going to be good enough for me. So he has his own little Well, his is not little. His is probably bigger. But mine is going to be small because I don't have as much money as Warren Buffett has. Okay? Please explain what happens if the stock skyrockets past 80. People typically don't understand that. Ooh, hold that thought. Okay? I get it. Okay? So, the question on the floor at this moment in time, what happens if the stock jumps up? Well, if I buy it at 66, I sell somebody the rights to buy it at 66, and the stock jumps up, well, guess what? Whoever bought it, the opportunity to buy it from me at 66, more than likely, they're going to take it away at 66. Terribly sorry. The difference between the 66 and the 80 now belongs to the person who gave you the 163.50 per contract. What are you looking for? I'm looking for the 1% every single week. Does this happen? Yeah, it happens a lot. I get 1% a week, the stock jumps up. Whoever bought that from me, well, they made a profit. Well, here's the thing. Okay, you understand what a bear is and a bull is in the stock market. Bears think the stock's going down, bull thinks it's going to go up. Well, here's the thing. Bears make money, bulls make money, and pigs get slaughtered. If the stock jumps up to 80, fine, share the profits with someone else. My goal is a simple, safe, predictable, consistent 1% per week. Okay, if I get my 1%, great. If not, fine. Okay, if the stock goes down, I just keep it, write another covered call, bring in some more money. Is it going to be 163 again next week? I don't know. Because, here you go, a quote from John F. Kennedy. We cannot answer the questions of tomorrow with the knowledge we possess today. I know today that I did this. Because I did it this morning. Okay, I think I got like 3 or 4% this morning. Okay, because I did it earlier. But, so I don't know what's going to happen between now and Friday when it expires. The purple party. Oh, Rick, you like that? I'm going to get a new t-shirt. It's going to be purple. I'm not Democrat. I'm not Republican. I'm commonsensical. It's going to be purple. The purple party. Yep. After you roll an option to the next week, can it still be called away anytime? Absolutely. Scott, here in the United States, the question is, if you roll an option to the next week, can it be still called away at any time? Absolutely. Here in the United States, our options are exercisable anytime, anywhere. What the hell were you thinking? I like that. It's funny. So think about it. Anytime it can be called away. But if you're setting it up in a manner in which the numbers are in your favor, then why are you worried about it? See, if I buy it at 66, I will hold on to it until the day I die or until someone buys it from me at 66 or higher. Because I will roll it every single week. Now, here's the thing. I'm getting 2.57% this week. Now, if it gets close to 66 by Friday, I have an opportunity to do one of two things. Number one, I can let it go, let someone take it from me. Number two, I can roll it into another week to see if I can get a little bit more money out of it. Well, why the hell not? It's Kroger. Okay? But there is going to come a time. Trust me, there will come a time. If the stock keeps going up and up and up, you cannot roll it forward for a full 1% anymore. For me, that's time to let it go. Wait for it to pull back and jump back in again. Well, I like Kroger. It's on my list. It pays a dividend 4 times a year. And 4 times a year, I look at it. Is it time to buy? Is it? It's a yes or a no. Because they do the same thing over and over and over again. They go up, they go down, they go up, they go down. That's it. What's your entry on Kroger? Ooh, Kroger earnings this Friday, so something to watch. Thank you, thank you. Can't I just date the stock? No, you can't date the stock. So, what was my entry on Kroger? That's a good question. What was my entry on Kroger? Hold that thought. I'm going to have to borrow this phone for a second. All right, so I got my Kroger at 65.94 this morning. Okay, because we saw it last night. Now, for those of you here last night, we saw it last night. And no, it was not a recommendation. No, it was not a tip. It was just us looking at stocks, me pointing out the numbers, and me saying, oh, I like that. I think I will do that. I did not make a suggestion to anybody. Okay? Now, we take a look at stocks every single night. Every once in a while, one will pop up and say, buy me, buy me, buy me. So I write it down and I buy it the next day. I don't give anyone suggestions. I tell everyone every single night, do your own research. Never blindly listen to anybody on YouTube or TikTok or wherever the hell you're viewing it on. All right, so let's keep on keeping on. Kroger, oh, wait a second. Hold the phone. Because I didn't tell you the best part about my trade on Kroger. Now, I've been trading for over 20 years. Now, I do not suggest any of you do this until you understand the risks involved. All right? Now, I'm sure you've heard of margin. Margin is when you put up X amount of dollars and the broker you use gives you the same amount to play with. So if I put up 100 grand, they're going to give me 100 grand. So now I have 200 grand to play with. But half of that is their money, half of it's my money. It's called margin money. So right here, it tells you exactly what this trade is costing me on margin. And then my rate of return increases. You ready for this? Let's check this out. Okay. Calculator. Now, it's the exact same profit because it's the exact same trade, but two different answers. Let me explain why there are two different answers. Answer number one, if your account is all cash. Now, all cash means it is the safest trading account there is. So if the stocks drop, you don't lose anything until you sell at a loss. So remember rule 2, never sell at a loss. If the stock drops, oh well, the companies increase their dividends every year, so you're getting more money every year anyway. Okay? So here's the thing. Profit's still the same, 163.50. 163.50. Divide that by, instead of all cash, okay, cost of trade including commissions and fees, 6,337. Buying power effect, 3,136. That's how much cash of mine is. The rest of it is margin, borrowed money. Never ever use borrowed money until you understand the risks involved. Okay? That's probably the only advice I actually give. Never use real money. Do a paper trading account first until you can do it blindfolded. You know everything. Because in the back of your head, there will be a voice telling you, you're ready to do real money. You're ready to do real money. Let's put some real money on the line. You will know when you're ready until you're really good at it. Paper trade. Don't risk money until you're good at it. Never do margin until you understand the risks involved. So let's take a look at what the rate of return on margin was this morning. Okay, so 163.50, that's the profit, because the trade doesn't change. Just the amount of money I have on the line changes. So let's divide that by buying power effect, 31.36. 31.36. 5.2%. Do you have any idea what 5.2% every week looks like? Seriously, 5% every single week. If you have 100 grand, that's $5,000 a week. Well, that's nice. If you have $100, it's only $5 a week. You get $10,000, it's only $50 a week. But still, 5% every single week. Do the math. It calculates right there. Let's do it right now. 5.2% multiplied by 52, because it's 52 weeks in the year, right? Equals 271%. Now, can you get that every week? No. Do I get that every week? No. I average. Okay, my average is 1.4%. That's my average. Okay? Sometimes I don't make 1%. Sometimes I make more. But it's an average. And it's boring as hell because I do the exact same thing week after week after week after week. Okay? Can you do your strategy with 30K? Sure you can. Okay. Design. Okay, well, buy some shares at a good entry, sell for a profit. You're not collecting the premium. That'll work, but you got to wait for the stock to move. I don't. See, if I'm making 1 or 2% every single week without doing any, with the stock not doing anything. Now, what you're saying, yeah, it could work. Okay? He's saying buy the stock, wait for the stock to go up, and then sell the stock, get the profit. Yeah, that works. But you're waiting for the stock to move. Now, what happens if the stock just goes sideways all week? You collect nothing. So I don't do it that way. I sell a covered call. I buy it for a price, sell it for the exact same price, and I collect that premium. If that premium is over 1%, great, I'm done. I'm not looking for the stock to become a circus monkey. Okay, hey, do this, hey, do that. No, stay right where it is. I really don't care, as long as the company's consistently profitable and has weekly options. All right, so I got a couple of questions. Let's see. If the stock keeps going up, let's say 20% or more, have a roll it many times, can you buy the option back and still keep the stock premium and then sell the stock for your gain? Unfortunately, Scott, doesn't work that way. As the stock increases, so does the value of the option. So you think as the stock increases, oh, great, I could buy that option back and then sell the stock. Nope, won't work. Because as the stock goes up, the value of the option goes up. So when you try to buy back that option, you're actually digging into the profits. So by the time you buy the option back and sell the stock, you're at a break even. It's like just basically a waste of time, and the only one who wins there is the person collecting the commissions. Take your profit, say thank you very much. I'll see you after you drop back down and at a better level to jump in again. Okay, this is what I do. I'm not telling you what to do. I'm just telling you what I do. Because I did it with US Steel twice this year. I bought it. It went up to a point where it didn't make sense to keep that money tied up for 0.5%. Let it go. Pick another stock and let it go up. There's no specific time when you're ready. I'm not quite sure what you mean by that, Edwin, but okay. Explain the pros and cons of Misty. MSTY does not have 2 decades of profitability, so I don't even look at it. I only look at it when people ask me to look at it, and then I tell them why I don't like it. Okay, when I say 2 decades of consistent profitability, Misty is 18 years away from that. Okay, now the stock market's been around for 400 years. Why would I do anything less than 20 years old? All right, what else we got? Okay, the alternative version of my question. The stock will go up. Why use a covered call? Wouldn't a call option be better? That's a great question. Now, number one, it's not guaranteed. Stock have a tendency to increase in value. So if you buy an option, which is what he's asking, wouldn't buying the option be more profitable? Yes and no. Yes if you're right, no if you're wrong. Here's the statistics. 80% of all options expire worthless. I do not buy options in any way, shape, or form unless I'm getting out of a position. Okay? Now, if 80% expire worthless, wouldn't I want to sell them rather than buy them? Could be on the 80%. I want to be on the 80% side. So no, I don't buy options. Okay, and what if you're wrong? Will you lose that money? Well, if I'm wrong, I still keep the stock and I still keep the income. Okay, rule number one: never buy something you don't want to own. So why would I buy a call if it's an 80% possibility of it expiring worthless? Buying the stock, I own the stock until I decide to sell it. Now, if the company consistently increases its profits every year, I'm getting higher dividends. And I have the opportunity, I don't have to, but I have the opportunity to sell a covered call every single week. So don't get me wrong, a lot of people buy options. It's great. There's an ass for every saddle. Nothing wrong with that at all. Cheer, I was responding to his comment, facts, blah, 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 blah. Okay, great. Hood is another strong stock. Yes, unfortunately, Hood does not have 20 years of increased profits. So I don't trade Hood. Bought Chipotle, call $50, expire 5/19. It's losing. I don't know what to do. What should I do? Okay, so unfortunately, Tamiko, I can't tell you what. Well, I can tell you what to do, but I'm not going to tell you what to do because it would be a disservice to you because I know absolutely nothing about you. I already told you I don't buy options. I cannot give you advice on what to do with an option. I don't buy them because 80% of them expire worthless. Okay, so ask yourself the question: what makes you think you're in the 20% group where you're right when 80% of the time people are wrong? All right, so I don't buy options. Sorry, so I can't give you any opinion on that whatsoever, other than telling you I don't do them and the reason why I don't do them. I want safety, and I want preservation of my capital. Safety, preservation of my capital, and I want profitability. Okay, that's what I'm looking for. I don't think he does Misty or Coney at all. No, Karam, I don't, because neither one of those have numbers that actually substantiate what I'm looking for. You need a stock to move on high volume. No, Edwin, I don't. I need a average, everyday, normal stock. Okay, IBM, AT&T, Ford, General Motors, ConocoPhillips, Consolidated Edison, Home Depot, Lowe's. Okay, these are companies you know of, you heard of. Those are the only ones I do. 2 decades of consistent profitability. You know them. Johnson & Johnson, Colgate Palmolive, okay, Bank of America, Wells Fargo, whole bunch of them. There's about 300 of them. All right, let's keep on keeping on. What else do we have? What else do we have? Okay. Selling covers calls is the way to go. Thank you, Bones. I'm late to the party, but are we talking about options or common stocks or option strategies? Okay, G4, we're talking about investing in dividend stocks for a weekly cash flow using a safe, predictable, consistent 1% per week trading strategy called the covered call against a qualified dividend stock. Those are companies that are consistently profitable for at least a minimum of 2 decades. Got it? Good. All right, let's keep on keeping on. Can you share 3 stocks this works well with? Okay, you ready, Kingman? Dividend Kings. 54 companies have consistently increased their profits for 5 decades. Okay, Dividend Aristocrats. 67 companies that have increased their profits for 25 years. Dividend Champions. 150 companies that have consistently, hey, check that out, woohoo, 150 different companies. Dividend Contenders. 300 different companies. Then you got Warren Buffett's list, which I have no idea how many are on that list. Great system and contact. Thank you very much. Josh, do you have an in-depth video on this strategy? Josh, believe it or not, you go to my YouTube channel, you're going to see over 1,000 videos. Can you believe that? I got over 1,000 videos on YouTube. That's not including the shorts, not including, TikTok, not including, I've been online way too long. All right. Awesome. I'm following you now. Good stuff. Thanks. I'm here every single night, G4. All right. So let's keep on keeping on. Terry wants to take a look at Verizon. Terry, let's take a look at Verizon. All right. Let's get out of this one. Let's get out. We gotta get out of this place. If it's the last thing we ever do. All right. So next, we're looking at when you say 1% weekly, do you mean 1% unrealized gains weekly? No, Holly. Okay, Holly Sheetman. Okay, I sell a covered call every single week. Now, there's a difference between a realized and an unrealized gain. When you sell something and you bring money in, that is a gain. When something increases in value, that is an unrealized gain. Understand? So when I buy a stock, I own the stock. Until I sell that stock, it's neither a gain nor a loss. It is an unrealized gain or loss as the stocks go up and down. Now for options, when you sell an option, that's cash coming in. That is a realized gain. Okay. Your residence. Hey, dude. Wait a minute. Hakuna Matata. How are you today? Good evening, sir. Long time no see. Hey, believe it or not, I'm still doing the same thing. Hey, you never sent that book over that you said you were writing. I'd like to take a look at it. Yeah, Gurdeepnath. Okay. Thank you. How much do you make on your best week of training? Not quite sure what you're meaning. Do you mean trading or training? I make nothing off of this. Believe it or not, you're supposed to get X amount on certain 1,000 people that you get. I make 5 cents a night. That's about it. The numbers are terrible, but that's not what I'm doing it for. I'm doing it for the video content for my children and my grandchildren. Because someday, my mom's at that point in her life. Okay, she's in her 80s. We know it's coming. All right. At some point, I'm going to be in the same position. But I want to be able to leave everything I learned over my lifetime to my children and my grandchildren. That's one of the reasons why I'm doing this. How much do we make on my week on trading? Can you do this with 30K? Yes, you do. Yes, you can. Now, 1% of 30,000 is only $300 a week. But think about it. $300 extra a week with minimal risk. Now, the reason I say minimal risk, because rule number one, never buy something you don't understand or don't want to hold on to. If it doesn't make sense, if you don't know what it is, you don't know what they do, don't buy it. Okay, if the numbers don't look right, don't buy it. If it's not consistently profitable, don't buy it. If there's no way to get weekly cash flow from it, don't buy it. Okay, I'm not telling you what to do. I'm just telling you what I do. I'm looking for consistency and profitability. Because for me to invest in a company that's not consistently profitable, it doesn't make any sense. No, I'm terribly sorry. Okay, I want to be correct. And I don't have to be correct all the time. I just want to make sure what I'm buying, I'm okay with. Good to see my Tempest AI is at a 50% unrealized gain. Okay, unrealized doesn't mean jack squat anything because you can't pay bills with an unrealized gain. Terribly sorry. Just because the stock goes up doesn't mean it's a profit. It's not a profit until you take it. Okay, Holly? It may look good on paper, but unless you can pay the bills with it, it's not a profit until you take it. All right? Awesome. I'm following you now. Good. Just got that. Blah, blah, blah. Cool beans, cool beans. I know you are a fan of TEM. I've never even heard of TEM. All right, hold that thought. TEM. What the heck is TEM? TEM. Tempest AI Inc. TEM. Okay, it's at 72. Okay. I'm going to say no for this week. Reason being. Okay, reason being. Here's our, let me go over this side. Here's our low over here, right around 50. She jumped up, pulled back, shot back up again to 74. So from 50 to 74, that is a 50% increase. Think about it. A 50% increase from here to here. Do you really think people are going to hold on? Oh, it went up 50%. Maybe I'll take it. Maybe I won't. Because I can guarantee you, there's a whole bunch load of people. Look at this, 10 million shares traded today. If stock goes up and you don't take a profit, that's your own fault. It's not a profit until you take it. You want to know something interesting, Holly? Nobody ever went broke taking profits. Okay? Don't. You remember. I just need to finish the last part. Lost some of my notes. Okay, your residence, okay? Hakuna. I don't have, all my notes are in book form. I don't do any of my notes on a computer. I'll take computers as far as I can throw them. Yes, I know what it means. All right, Holly. Oh, someone else handles your private messages then. No? Actually, they don't. I take care of all my own messages. Because contrary to what you may think, this is not a business enterprise. This is just a hobby. Okay? I'm not at a point to do anything, as in that type. Okay. All right. I must have misunderstood. I thought you buy to get the dividend and the premium from the covered call. No, I'm not looking to capture the dividend. I'm looking to capture the premium from the covered call sale. That is usually more than 1%. Let me show you something. You might like this. Let's go to Market Watch. Let's get this out of the way. Let's take a look at, General Dynamics. Okay, General Dynamics. Right here. The 3rd of July. General Dynamics. as a $1.50 dividend. Okay? How many weeks is that? Okay, so we're here. That's 1, 2, 3, 3 weeks away. All right, so remember these numbers. 3 weeks away. Right now, the dividend is $1.50. So let's go and see what the premium for General Dynamics is at the money. Okay, GD, General Dynamics. Okay, so General Dynamics at this moment in time is at 281.80. Okay, so the 282, or the 280, wait a second. 179 is the last trade. So we're looking at the 280. Last trade, 279.29. Closest strike price is going to be 280. The 280 is going for $2. 1 week, I can get more than the dividend. And I got 3 weeks before I capture the dividend. So hypothetically speaking, all right, see the number right there? The 280 is going for 205. All right, the stock was last traded at 279.29. So if I buy it at 279.29, sell somebody the rights to buy it from me at 280, well, I collect the difference between 279.29 and 280. Well, that's a little bit more money, but I'm also collecting the 205. All right, every week. So take a look. Back to the market watch right there. So today is the 16th. So that's $2 or almost 1%. So 1% here. Okay, that's $200 here, $200 here, $200 here, and the dividend. So if the dividend is less than the premium, why would I want to collect the dividend? See, the dividend is $1.50. The premium is $2. Come on, we all know our math. We all know that $2 is higher than $1.50. So why are you looking to catch the dividend and not the premium? Okay, so if I buy it right here, the current price, $279.29, sell it $280, I can pick up $205. That's more than the dividend. That's just for this week, because I can do it again next week. Next week, here we go right here. Here it is again, next week. And then the week after, okay? Week after. I can do it every single week. As a matter of fact, I can jump over these weeks and go right to this week and pick up 430, which is a lot more money. See, you have a lot more options with options. Isn't that weird? You have a lot more options with options. Okay, so my goal, simple, safe, predictable, consistent 1% per week. All righty? Now, does anyone else have a good stock to take a look at before the day's over? We're going to take a look at Ford real quick. Ford. Ford. Here we go. Now, I'm going to click the button, count in your head how long it takes for you to figure out those 5 things. High, low, was, is, what direction? Okay? High, low, was, is, the direction. Okay? 3 to 4 seconds. That should all it could take. Aren't you getting both if you're holding the stock? All right, Kevin, sometimes you will collect both, sometimes you will not. Now, I would prefer not to collect a dividend because stocks have a tendency to go up just before the dividend date. And then they have a tendency to go down after they pay their dividends. So I prefer to get in, get out, and move on. But, everybody's different. You may find something else that you might think differently. Okay, Albert, BR. Oh, my. 110C Beast doesn't think 1% a week is sustainable. Ooh, you have no idea. I love naysayers. I love naysayers and negative people. Because they say if you don't have enough trolls and negative people, you're not doing your work properly. Well, I kind of need a little bit more because I only got 1 tonight. Only 1. Wait a minute. No, 2. 2 tonight. Okay, hold on. 110C Beast. I guess he wants to see this because he's relatively new. So where are we? Where are we? Where are we? Right here. And we're going to go there. And we're going to go here to the website. To the website we go. There it is right there. The 10-minute trader. Do you see that? Does that sound familiar? Simple, safe, predictable, 1% per week, live nightly training, 9 p.m. Eastern Standard Time. That sound familiar? Yep, that's me right here. Okay, so we're going to go into the little hamburger right here, and we're going to look up weekly trades for 2025. Now, just in case you didn't know, 110C Beast, we are currently in week number 24 of the year. 24 for the year, week number 12 for the quarter. Okay, 13 weeks in a quarter. We're in week number 12. Next week is week number 13. The week after that is week number 1 of the third quarter. Okay, so we're in week number 23. Okay, no, week number 24. So here you'll see weekly trades. Now remember, I have 7 different accounts. 7. I share 3 of them publicly. So here they are. Account 1, account 2, account 3. The numbers are all there. So you think 1% a week is not sustainable. All right, so let's go all the way back to week number 1, which is the first week of the year. That's 8, 7, 6, 5, 4, 3, 2, 1. Now, do you want to look at account 1, account 2, or account 3? Well, let's take a look at all of them. You ready? Account 1, 2, 3. First week of the year, 6.19, 1.82, 4.23, 2.33, 1.72, 1.89. Week 3, 4.8, 3.6, 1.8. Week 4, 2.3, 2.02, 3.3. Week 5, 3.8, 1.2, 3.5, 3.01, 1.59, 3.78, 1.4, 1.1, 3.9. Shall I continue, or do you just want to take my word for it that I average over 1% every single week? There's all the trades. You can go there, pick out any one you want. Any one. Here they all are. Kohl's, Riley, Harley-Davidson, Walgreens, Ford, Altria. Credit, 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 credit. And here's the numbers right there. Add them up yourself. Okay? You got 50 contracts at $6 a share. That's $300 just for that one trade. All the numbers are there. So benefit of the doubt is always a good thing. Okay? You don't believe me? Fine. You don't have to. I really don't care one way or the other. I put everything out there to be as transparent as possible. I come here and I share the information freely, and I don't ask for anything. And then you insult me. Okay, I see where you're coming from. Let's go back to where we were. All righty, so it is 11:18. We usually reserve this time to answer questions. Let's see what we got. Interactive Broker, I looked at them. Lynn wants to take a look at GPT. What the heck is GPT? Lynn, just to give you a little bit of a heads up, anytime I say, what the hell is that? It's usually going to be a no. Usually. GPT Group. I spelled it right. GPT. Well, it says we can't find this symbol. That gives me a little bit of a, that's a no vibe. Okay, if Charles Schwab, one of the biggest brokerages in the United States, cannot find it, it probably doesn't exist. So I don't know what your GPT means. So you get 1% a week all of 2022. I wasn't showing 2022. I was showing 2024 and 2025. 2022, do I have some? I think I do. Hold that thought. Hold that thought. Where are we? Where are we? Where are we? No, I don't want that. I'm going to go over here, see if I can find it. Let's see if I can find it. Nope, I didn't want it to do that. Didn't want it to do that. Okay. All right, you're gonna have to come back tomorrow if I find it. I actually save all the trades that I do. All right, hold on a second. Okay, hold that thought. Hold that thought. Oh, gotta wait for it to open up. Okay, so this is my trade history for today. I will take a picture of that and I'll put it on file. Okay, and I'll put today's date with it. So every single trading date that I have will have the timestamp, what kind of a trade it was, how many it was, and was it a profit or a debit over there. And then I'll add it up. And what does it come to? Okay, I show those numbers every single week. So let's see 2022. Yeah, you're gonna have to wait on that one because I don't have that one posted. Let's get out of here. All right. All right, what else do we have? GEV. What the heck is GEV? GEV. Interesting. GE Vernova. What the heck is that? Sorry, I'm trying to find it easier, but it's somewhere in my computer. It's not something I usually jump into. People usually don't ask me. She probably means Chat GPT. Yeah, no, that ain't gonna happen. Oh, I must have misunderstood by the cover call dividend. Yep, I'll get that one. You have to leave some meat on the bones. If you ask for a higher premium, you might not sell the option. Absolutely, Chase and Jack. You have to, yep, got that question, got that one. Also, you mentioned making a trade on Kroger. We already did that one. I got my 2% on Kroger today. If it sells Friday, I will get another 2%. Nice going, Jack. Thank you, appreciate the session. Cool beans. What do I like UNH? No, I do not. Howdy, what's going on with DJT? Doesn't have dividends, doesn't fit. Sorry. I'm looking for consistent profitability. DJT is not 20 years old, so there's no way it has 20 years of profit. Estee Lauder finally got a break today. Cool, I like Estee Lauder. Let's take a gander. EL, Estee Lauder. Ooh, wait a second. That's an idea. I knew I had it somewhere. I think I may have found it. That's 2025. I don't want that one. Screenshots. Do I want that one? I don't think so. Stock market. Well, that could be it right there. Oh, found it. 2022 trades. Hold on a second. See if I can get this right. Okay. Open. All right, here we go. Check that one out. April 4th, 2022. Oh. April 5th, 2022. April 19th, April 29th, December 22nd, December 2nd, December 7th. Yep, I got a whole bunch of 2022s right there. And do I know what it is off the top of my head? Terribly sorry, dude. I don't. Okay? I don't live in the past. What happened in the past happened in the past. I like to look at this week and I like to look at next week. Okay? So, what did I get in 2022? Don't know, don't care. Okay? It's not 2022 anymore. I'm past that. And there's no way for me to prove or disprove what I've done in the past because I'm just doing this for the fun of it. Okay, I'm not selling anything. I'm not asking you to buy anything. I'm just sharing information. Either it makes sense or it doesn't. One or the other. Believe it, don't believe it, don't really care. All right, let's get out of that. Let's get out of this. Let's get out of that. And all right, anyway, let's get back to where we were, right there. All right, back to where we were. What else do we got? Estee Lauder. Oh, cool. I'm going to say no to Estee Lauder only because, take a look right there. Okay? You bottom, you top. Not someplace I want to buy. Okay? I buy low, which would be here. See, it went up and pulled back. And then you have congestion here, or consolidation, or whatever you want to call it. 2 days to the upside. On the third day, I would jump in, take it up to the prof and get it. It's a good strategy. It's not possible forever. 1% compounded, you would be a billionaire. See, I love it when people automatically assume that I have more money than I got, number one, and number two, that this is my only thing that I do. Terribly sorry, dude. I spend 10 or 15 minutes in the morning, I get my 1%, I'm done and over with. Greed has gone by me long time ago. Okay? Money is no longer a driving factor for me, but it is a necessity in life. So 1% every week pays for my bills. I don't need anything over that. Okay? I've never, ever seen a hearse go by with a U-Haul. Never. So whatever it is you're striving to collect along the way, you ain't taking it with you. Okay? I use my money sparingly to pay my bills, to help out my kids, take care of my mother, those kind of things. I'm not looking to be a billionaire. I'm perfectly happy where I am. Matter of fact, I like to stay incognito. I like to go through life with as if a fly on the wall that nobody notices. That's me. That's what I'm looking for. It's 20 years a public company. Skit B, what are we talking about? Skit B said something, but I have no idea. There it is. She's probably meant ChatGPT. Okay, yeah, no. I don't do ChatGPT. Hasn't been around long enough. Yes. ChatGPT is 20 years old. When you sell a put, should I use the bid or the ask price? Tamiko, I have no idea what you're talking about. Now, like I said earlier, you're talking about selling a put. Would you, the one that says sell. You take your cursor. Okay, wherever you put your cursor, watch this. See the little thingy right there moving around? Well, where is it? Right there. See it moving around? Okay, right there, little cursor. Okay, the cursor will tell you exactly what you're doing. You bring the cursor over there, it lights up and says sell. If I slide over there just a tiny bit more, it lights up and says buy. It'll tell you exactly what you're doing. Uh-oh, low battery. Low battery, we can't have that on my YouTube. There we go. MPW, love NPW. Hey, 86, what's happening, dude? Nice to see you, brother. Okay, Steven, MPW. I actually have some of that. Estee Lauder was privately owned until not long ago, I thought. Well, Estee Lauder is a public company now. And no, I would not buy it at the high of the year. I never, ever buy anything at the high of the year. To me, it doesn't make any sense. Why would you go on a journey where someplace you've never been before? Okay, Stephen wants to take a look at MPW. Now, I do have some MPW. Okay, take a look. The high, the low, where it was, where it is. Look at this. Up, down, up, down. It's dropping from here. The high is 660. Right now, we're at 443. Okay. Well, let's jump the gun and go right to the last 30 days. Here's your last 30 days. 30-day high, 30-day bottom was Friday. Well, today is the first day to the upside. Now, remember, I like 2 days to the upside. So if tomorrow is an up day, great. I'll be really looking forward to Wednesday. Is Wednesday going to be the third day for me to jump in? Because the bottom's right there. 30-day top, 30-day bottom. Okay, today was 1 day above the bottom, which was Friday. Friday's the bottom at this moment in time. Now, tomorrow, be a different story. Is it going to be higher tomorrow or is it going to be lower tomorrow? Well, we won't know until tomorrow night. Isn't that great? Cliffhanger. Stay tuned next week on TV Today. Yeah, Pfizer. Laurie, we'll take a look at Pfizer tomorrow. It's 11:30. I'm out of here. You guys have a great night. For those of you in the morning trading group, just a quick brief. You're going to get an email in a couple of seconds saying, I'm not going to be there tomorrow morning. So it's going to be a little later on because I got one of those emergency dental appointments at 9 a.m. Okay, they squeezed me in when they can squeeze me in, and it was tomorrow morning. So that's what it's going to be. G4, you're welcome, you're welcome, you're welcome. You guys have a great day. You guys over here, have a lovely evening. And over there, and over here. And now the end is here. And so I face the final curtain. My friends, I'll say it clear. Turn the damn thing off. I'll state my case, for which I'm certain I've lived a life